Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and it's been a very wild ride the last 24 hours. You've had the 62 area, which was rejected late last week. You had the 54 area, which turned into a lower high that got confirmed during Globex, not last night, but the night before. The bears sold that very hard, and in my opinion, they sold it too hard. They sold it right back down into that morning dip area, made the low at 13.25, and it was very easy for dip buyers, especially on the day preceding the Fed meeting. We've got the Fed announcement today at 2 p.m. No press conference, just the announcement. It was very easy for the dip buyers to just come in and say, you know what, bing, let me pick that off. Because minus 2% by 11:30 in the morning is a dip buyer's dream. So they came in, they broke it back through 2 or 3 key areas that we watch, and they were able to get it back up over and close over the middle band. So, it's not a question of who's blowing it. Everybody's blowing it. The title of my webcast yesterday was that nobody wants it, and still nobody is acting like they want it. They get the middle band back, they blow it. They get it back, they blow it. Bears have it under, they blow it, they let it go back above. So right now we're back above. You got the middle band sitting 20, 30, 78. Your low in Globex is 28.5. The high is 46. So, it popped in the after hours yesterday after the Apple earnings, and Europe came in last night and sold it all over again. We went from about 45 back down to the 28s, and now we've gone back up to test 2040 and back off there. So a lot of volatility in the tape. I'd rather the volatility be at 3 in the afternoon versus 3 o'clock in the morning, but if you're one of these people that trades in the middle of the night, this is your market. What am I looking for today? I think the underlying issue with all of this is nobody's quite sure what the Fed's going to do. They don't know if it's going to delay interest rate hikes or if it's going to, or if the Fed's going to care at all. And you know what? Neither do we. We're just traders, okay? Don't game the Fed, okay? I always say don't game jobs, don't game the Fed. Don't make some big old bet based upon what your amateur economic analysis is, because you read The Economist this weekend about the reaction, about what you think the reaction is going to be to the Fed announcement, because you don't know. It's our job to let the announcement happen, to evaluate the reaction, figure out which side is going to win, and jump on that horse and ride it to victory. So be patient today. I would expect at some point in the middle of the day we're going to get kind of stuck on a shelf, and we're going to wait on the Fed, and we'll go from there. What we'll be doing in the room is we'll gauge the announcement, take a look at it on the live charts, we'll find a range, and if there's a setup there, we'll trade it, and if there isn't, then we won't. It just depends. Just because it's a Fed day and because it's supposed to be very exciting doesn't necessarily mean you always have to be trading. There has to be a setup. Okay, I would note you've got the 20-day simple moving average, the middle band, you got the 50-day exponential, and you got the 9-day, all converging here right around 28, 29. That, for me, is going to be kind of a bull-bear line today. Okay? So everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Check out the room. I will be back tomorrow morning with another webcast. Trade them well, everybody.